Folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 29th, 2008. Well, as we get into today's video, folks, we're going to look at the massive rally on Wall Street today, which, as ugly of a day as yesterday was with the market getting slammed to the downside on light volume, today was the exact opposite. You had the markets getting taken up on relatively light volume as Merrill Lynch led the rally as the financials and banks took lead here and rallied and roared higher. You also had alternate energy being very, very strong today with oil being down. That was interesting to note, but they've just been beaten down so much that they were due for a rally, and there's a lot of shorts in them. So either way, you had financials really leading things today, technology was strong, and basically what we dropped yesterday, we regained back today, and then maybe a little bit extra as well. So the market really did have a nice day today across the board, and we're going to get into that today as we saw the overall indexes gain multiple percent. The S&P was up almost 29 points, the Dow was up 266, and the NASDAQ was up 55 and change. Now yesterday we saw the indexes down almost that much, and today reversing back to the upside. Now, the interesting thing about that is today was we expected a pause day after that big drop yesterday. Usually after that major move, you obviously expect a pause day, consolidation day, and we actually had position and update coming in for tomorrow. But the whole thing has kind of been shifted now as we were a day off on that, and we're going to have to reanalyze the charts in this video to figure out exactly, well, what does this mean, all right? And we're going to do that. But before we get into that, I just want to touch base on this. Now, we had the webinar last Saturday, and a bunch of you guys, we couldn't get all you in because we had only a limit of a certain amount in that webinar on Saturday. So we did actually position one for this coming Saturday, August 2nd, 2008. So on Saturday, the coming Saturday, 1 p.m. to 5 p.m. And by the way, guys, the one on Saturday went to close to 6:30. You know, we go as long as we need to go when we're teaching this stuff. We do live chart analysis and so forth. But either way, just come to InTheMoneyStocks.com, click on webinars, and it's listed right here. You just click right here, and also just scan down to the apprentice, and you can see exactly what's going to be covered, all right? Japanese candlesticks, level 2, learn to use all this stuff, trend lines in scientific way, volume analysis, the keys unlocked, support and resistance points, essential time period analysis, most effective patterns and when to apply them, indicators, how and when to use them correctly, proprietary trading discoveries. This is where we talk about time analysis that we've discovered and contrarian thinking philosophies. And then at the end, we do live chart analysis where you guys talk to us about certain charts and we analyze them live with you on the conference call line that we have as you guys talk to us live and you're watching all of our screen on your screen. So either way, come sign up, guys. Get in now because, again, we only have a limited amount of room. We don't take on that many individuals because it's just hard to handle that many questions. So we really like to be able to give as much one-on-one as we can. Alrighty, so let's get into this overall market today. Now, remember the market yesterday, how we had that basic constant move down? It was kind of shaped like this all day down. Well, it was reversed today to the upside, and you can see that here. There was no major pullback. There was no major dip in the market. There was no major dip then rally. It was pretty much a straight up day. You had a small little pullback here, which is really, those of you that have taken the webinar know it's basically a bull flag off of this move. All right, you had this move, bull flag right into the 20, and you don't get a better setup than that. And look at that rally. And then you have another sideways consolidation pattern and another jump. Another sideways consolidation jump and another jump. And then you had a little bit of a pullback this. And what's happening right here, oil actually was down substantially on the day. And right around this 145 to 230 time frame, and by the way, spot crude oil closes at 2 o'clock, you had actually a run-up in crude where it was only down $1 and change on the USO. And with that, the market came in. Also, what you had was an earthquake in California. I think it was 5.4. It was a lot, you know, either way, you saw a little bit of a sell-off in the markets dipping, but once that came to fruition and we found out that there was, at least at that stage, there was no major damage done, it went up to the upside again and rallied back to the highs, closing and squeezing at the highs here on the day. Now, volume-wise, let's look at volume on the daily because I really want to talk about that. Let's flip to the daily here. Volume was a little heavier than yesterday, but really right in line with the last couple days. And we've been talking about the expectation of that pullback ever since we called it right here, all right? Now, as I mentioned, we weren't expecting the update till tomorrow, but it did happen a day early. And, you know, that happens from time to time. You're not going to hit it dead on 100% all the time, obviously. But in any case, you had the 3-day pullback here off the topping tail on the SPY formation, and then you had a reversal candle today. Now, the key in this is that we're obviously creating some sort of consolidation pattern here. You had a big drop yesterday, you basically took it back today, and you're still considered this to be a consolidation pattern off of this move. Now, the question is now, where do we go? This throws off the time analysis point slightly in this analysis, and so we have to figure that out, and we're going to try to do that. We obviously can't divulge all of our stuff. A lot of this will come out in the webinar and the counts and so forth on the charts. But what you're going to see here on this chart pattern is, notice the 1, 2, 3 pullback. That's a standard pullback. Oftentimes you get another number on the downside for consolidation before a breakup, and we're going to have to still look for that. All right, we do, as you guys know, we've off of this move, we've been calling for a move down and then another move up, and we're still going to hold to that, but we have to stick with what we think here, and that's another pause day or a pause day, small move either way tomorrow. Maybe a little bit of a pullback tomorrow, maybe a little bit of a gain. Either way, you got to anticipate off of a 2-day major move one way or the other. You have to have a little bit of a pause day in here. Now, again, maybe we reverse down to the downside. We just put the odds in our favor here, and that's the best we can do, and we've been extremely accurate, obviously, doing it over the past year and a half or so to 2 years in these videos. So we're going to continue to try to do that, just put the odds of what's most likely to happen, and off of the move yesterday and then today, you have to anticipate a small move or a flattish day either way, unless we get a big number out there. Now, the one caveat to this, folks, that I'm noticing about tomorrow is that when we're going to flip to the USO chart, which was, again, oil dropped about $2.50, $3 today. Here's the move down on oil from a double top, and this is where we were actually calling the short on oil. Right up in this area, right up here, we were calling for it, and it came down, and then we went to a double top, and everyone right here was calling for that 150 break, and we were still sticking to our guns, and we've had a nice fall off of that. But now we come into some various support lines, all right? You obviously have this support line that you're dealing with here. And the one unique thing is you had it piercing that and now coming back to close right on that bottom line. But the question now is, do we continue to see more downside in oil or upside? Oil inventories tomorrow at 10:35 a.m. So in the morning you're going to get some news, and that's going to push this market one way or the other. All right, and the question will be, which way does it go? If you have a breakdown through this support line, well, then you're talking about the next area of support would be right down here, which was actually tested today. Notice how you actually saw that little wick trade all the way down to this support line here. Should that get broken, then we're possibly seeing a move as low as here. Now, we only put the odds in our favor. That's what we do. You guys know that at this stage, and we've been accurate doing it. Whether or not this gap window, and by the way, notice the gap right here, so it's a gap window, gets hit or not, you have to start to think that the oil market is due for a bounce. All right, and it doesn't mean you're definitely due for a bounce. It doesn't mean it's happening tomorrow, but the odds are beginning to shift that way. You know, for instance, if right at this point right up here you had a 50-50, you get down in this area, now you're at a 60-40, you come down a little more, 70-30, and that's what you're trying to do. And really what we obviously do, and those in the chat room know this, I don't call out a trade, or I don't enter a trade myself until I think there's an 80% chance of that working out. And I've said that in this video. So obviously, as it comes down lower, you begin to take the odds, and once the odds get so much in your favor, or at least you view them that way, that's when I'll step up. So there is a point here, as each line gets breached here, that the odds are increasing. So maybe there's a 60-40 chance of a bounce in oil tomorrow off of this line. If it were to come a little lower, then we're talking 70-30 at the gap window, and to be honest, it would probably get to the point where I would even take a sizable position if it were ever to fill that gap right here on the USO, and that would, to me, that would be about an 80-20 chance. So again, it's just about putting the odds in your favor, and as long as you can do better than 50-50, and obviously I expect myself to do 80-20, you're going to be a decent trader, and that's what you have to do. But you have to have solid analysis behind it. You just can't say, well, that looks like a good point, I might as well go long. I think it's a good ratio. Why? I want to know everything, and that's what I ask any traders that train with us in the office, and they ask me about it. They do chart analysis in front of me. I'm telling them, I'm quizzing them. I'm saying why. Give me 5 reasons why you like that chart there. Give me 4 reasons why you like that chart there. And if they can't come up with at least 3 to 5, you know what? Let it go. The odds aren't in your favor that much unless I see certain things in there. So in any case, that's just a little view into the mind of us as traders and in the money and how much we expect from ourselves on the upside. So in any case, keep a close eye. And the reason I mentioned the inventory number is because this could be a big play. You see oil spike up $3-5 any of these days, it's going to put pressure on the markets. But again, let's just talk about what happened today. Why did we get this rally? Oil and financials were the big players here. Oil again down. The dollar has gotten very, very strong here. Look at the XLF. And this is interesting, guys, because we talked about the XLF possibly being on support here yet in yesterday's video, and you can go back and watch it. Notice you pierced the 50 moving average on the daily. You came down and 3 candles hit the 20, and look at the bounce you get off of this. So again, resistance is right here, support is right here. That's all you have to know. Trade it appropriately, okay? On the SKF, which is 2 times short the financials, You had a major bounce off the 200, and my 200 always disappears every video. I have to plug it back in here. Here's the 200 moving average. You knew you were getting a bounce. You got a 3-bar surge to the upside. Those that take the webinar obviously learn what's important about that. You see the reversal today. Now it's kind of in no man's land, and this is what I call no man's land, where it's not a very profitable trade either way. It could test this level, or it could test the high again, and until I get one signal one way or the other and multiple reasons, it becomes a no trade, all right? It was a great trade on the long side, as we mentioned in this chat room here. And now, once you got that 3-bar surge, those in the chat, in the webinar, and in the chat room know, obviously, to move away from that, and you get the pullback today, and now it's a no trade. Simple as that. It could go either way. The odds are 50-50, 60-40. Either way, it doesn't even matter. So that's the analysis you want to pay attention to. Also, solars. I want to mention solars today because they were incredible. Huge move in the afternoon. You can just look at the first solar having a big move on the intraday chart. Look at this move up today. Keep an eye on these alternate energies if oil bounces as well. Have a wonderful day, guys. Sign up for the webinar. You got to get your spots quick, so sign up. We'll talk to you tomorrow. Join the chat room. Join the Swing Trade Alerts. We will see you then.